Have you ever dreamed of owning a business that combines real estate, hospitality, and steady cash flow, all while capitalizing on one of America's fastest growing lifestyle trends? I'm talking about RV parks. With more than 11 million households owning RVs and millions more renting them each year, the demand for well-run RV parks is exploding. Good news, you don't need to be a multimillionaire to get started. Thanks to SBA loans, you can buy an RV park with as little as 10% down and build legacy income for your family. In today's episode, we're going to break down exactly how SBA financing works for RV park purchases, why this industry is booming, and the steps you need to take if you want to make your dream of outdoor hospitality ownership a reality. Hey Beau, how's it going?
Going well.
So we're seeing a huge rise in interest for RV parks. Can you explain why this sector has become such a hot investment? What makes it different from other hospitality businesses?
I think it's gotten more popular because of social media. Everybody's talking about buying businesses. And when you combine real estate with a business, I think that's very attractive to many people. So social media has been driving like be your own boss, build wealth. And the reason I like real estate businesses that are owner operator like RV parks is because you can get SBA financing. You can get up to 90% financing. Potentially you can have a little bit of seller carryback on these types of deals. So you can get in with very little out of pocket. You don't have to go raise investor capital, where you're doing like a syndication. You can do it all yourself and bring in maybe one investor as a non-guarantor of the transaction. So that's why I think it's appealing. So if you look at RV parks too, it's like you just have dirt, right? You don't have the same problems you do as multifamily or any of those asset classes. Plus, multifamily is considered an investment where an RV park is considered an active business. So it's a difference where you can get SBA financing versus multifamily, you can't get SBA financing.
Got it. For someone considering buying an RV park, how do SBA loans make the deal possible compared to conventional financing? And what makes the terms like 10% down and 25-year amortization so attractive?
You can definitely do conventional financing. We do bank financing on RV parks often. Bank finance can be a lot lower leverage. So you're not going to get the same 90% or 85%. You're going to get 65 to maybe 70%, maybe 75, depending. Generally, right? Are there banks that will go higher leverage? The other thing with SBA financing is that we can build in construction. So if we want to build out more pads or we're doing some improvements to the RV park, like uh, pads or any types of renovations or installing new septic or anything that needs to be done can potentially be incorporated into the total loan, including working capital. So generally, you're not building working capital into a acquisition loan. And also, we can do value add projects. So if the project doesn't cash flow today, we still can get financing based on projections, whereas conventional loans are a little bit more challenging to get to the finish line. So much higher leverage and much higher proceeds because we can wrap other costs not normally being able to be financed through a conventional loan.
So let's talk about what it takes to actually qualify. What do lenders look for in an RV park buyer? Credit score, business plan, experience? And how can that first time owner position themselves to get approved?
Well, if you're buying a business and it cash flows, that's a lot easier than doing a construction project. Can I do both? Yes. Whether I'm assuming that we're buying an existing RV park. So if that's the case, on business loans, we always underwrite per SBA. We underwrite off of the business tax returns. So assuming that the cash flow from the tax returns of the business will debt service the new loan proceeds of the SBA loan, all day long, we can do 90%. It's all a component of debt service coverage. Now, what else do we look at? We look at your credit. We look at your transferable experience. It doesn't mean you have to have RV park experience. It could mean that in your W-2 job, you manage. On existing businesses, it's a little bit looser than, you need experience in that particular sector. Obviously, it would help if you had hospitality experience, but good credit and good outside income, and basically somebody that's borrowable. You have a 700 credit score. You have some reserves in the bank, and it doesn't have to be much. But if you fit those general borrowing characteristics and you have the skill sets, that transferable experience, and you're buying a cash flowing business, the better the cash flow, the easier the loan is to get.
So, walk us through the SBA loan options. When should an investor use a 7A loan versus a 504? And what about those larger transactions that need, say, a pari passu financing? How does that work for big resort style RV parks?
So there's lots. I mean, some of these are rural, so we can do the USDA B&I, which we can do up to 25 million. Somebody's coming in and they're doing some value add, or their plans are to refinance down the road and not wait 10 years because a 504, the second lien has a 10-year prepayment penalty. It declines over time, but and then the first has a prepay, and that's negotiated at bank level. Whereas the 7A only has a 3-year declining prepayment penalty. So sometimes by strategy, the 7A makes more sense.
Hmm.
And if it just doesn't have enough proceeds, let's say it's a $7 or $8 million acquisition, we can actually do a $7 million SBA 7A with a conventional loan in pari passu position. So there's lots of options. So what do? We analyze your situation, the cash flow today, and what the goal of the project is, and then we do a side-by-side comparison on all three, if all three are eligible, and then figure out what really makes the most sense based on all that criteria.
Can you share a client success story to show listeners how these loans play out in the real world?
Sure. So let's call him Henry. Henry bought his first RV park with an SBA financing. It was a smaller park. It was 20 pads. It was $500,000 or $600,000. It was cash flowing, so he was able to get 90% financing with the 7A. His plan was to, add additional pads in the future because it was on a larger parcel than he was only taking up a certain amount of space, and the county would have let him. So he got that stabilized. Then he came back a couple of years later and he built out the 20 or 30 extra pads and then, basically almost doubled his cash flow from when he purchased. Then years down the road, he bought another one, right? And he was able to use SBA 7A because you can have up to $5 million of SBA 7A. And you can do a lot bigger deals if we end up going to 504. We haven't done a 504 with him, but at some point he will do 504 green. And if you do the 504 green, you can have unlimited projects in the future if you're using a 504 green loan. So you have a lot of runway, a lot of bandwidth. So whether we've helped people that were building one from scratch, right? So we can do all sorts of use cases. Generally with RV parks, it's easier to finance if you don't own the coaches, right? The coaches are the like if you're treating it as a long-term rental, it's harder to get them financed because these are supposed to be daily stays, like run like an RV park. Now, a certain percentage can be long-term stays, and you'll see that a lot. But understanding the dynamics of the park, and then we figure out how to structure the debt financing.
What are some of the biggest mistakes you see buyers make when financing RV parks? Things like seasonal cash flow, environmental issues, or incomplete records. And how can they avoid them?
Well, yeah, we're always going to do a phase one environmental. So if there's any contamination, they're usually not because you're usually in like a rural area and there's not a gas station around. But that's a requirement. So just be aware of that. The biggest problem I see is that buyers get all excited and off of some pro formas, and then it takes them 2 months, and then they get the tax returns and they realize it won't qualify for SBA financing based on cash flow. And then they're like, then they have to revisit their story and say, okay, well, let's try to do this as a projection based loan. So I'd say don't waste your time. If your intention is to get SBA financing, you got to get the business tax returns from the seller first, and then we underwrite off of there. Now we can get creative and get seller financing with SBA, but don't spin your wheels for months thinking this deal is going to be great and you're going to get SBA financing. Pre-qualify it with SBA financing first, even before you put the LOI in place, because you just tell a seller, listen, seller, I don't want to have to retrade, meaning I don't want to have to come back after I give you an LOI and say, oh, I can't pay you $1.2 million. I can only pay you $7 million because there's not enough cash flow. So save you and the seller headache. And if you sign an NDA, they should be more than willing to accommodate you. And if they're savvy, they should realize that we're just trying to get the deal done, but we have to make sure it's bankable. Because if it's not bankable and it's a value add project, or you're not bankable, then you're going to take it down with expensive bridge debt most likely, and then have to refinance. So with SBA 7A, the reason I use it more often than the 504, because it is kind of like bridge debt. The rate's a little bit higher than the 504, but you have a lot more flexibility.
Got it. All right. Thanks, Beau. If you've been looking for a way to step into business ownership that combines lifestyle, real estate, and recurring revenue, RV parks could be your perfect path. With SBA financing, the doors open wider than ever. You don't need millions in the bank, you just need the right plan and the right guidance. Don't wait until prices rise and competition crowds in. If this conversation resonated with you, take the next step. Schedule your clarity call with Beau at bookwithbeau.com and start mapping your journey into RV park ownership today.
If you're a solopreneur or small business owner, listen closely. Business growth isn't about working harder. It's about building smarter systems. It's about automation. And that's exactly what Go High Level Hire helps you do. Build your funnel, automate your follow-up, manage your team, all in one place. Click the link below, activate your trial, and see how much more efficient, automated, and profitable your business can be in just 30 days.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.